Okay, everyone, and welcome. What you're about to see is an excerpt from a live stream that I did a couple weeks ago. I just thought it was an interesting topic, so I cut it out, and here it is for you. Just FYI, I do a live stream every weekend. So if you're interested in more live content where you can come by and ask questions and we chat about the markets and crypto and all of these things, hit the subscribe below, the little bell thing, and it will notify you when I go live. Thank you very much, and let me know what you think of it. Now, let's get into the SPY, and we're going to start with looking at this death cross that you hear everybody talk about. I'm going to remove these for now, and we'll just look at this right here. And this is one of those things, if you fall for, the financial media complex, hopefully today I can convince you to avoid that. The other thing we're doing is we're going to edit these out as videos, trying to milk as much content as I can, right? Why not? The death cross is something you'll hear a lot about in the financial media, where they talk about how when the 50-day moving averages cross under the 200-day moving average, it's this horrible event in which, the end of the world is coming and nothing will ever recover. Kind of the long and short of what you would see here. So the first thing I think that people have to do is understand that financial news is no different from any other news. They make money off scaring you, right? It's just the way it works. You should always then verify anything these things told you, because again, any follower of me for any length of time will tell you that I just don't believe in a lot of this stuff, because if there was something like this that was very consistently bearish for the market, that would get arbitraged away. It's just how the market works. So let's just eyeball it before I go into some of the statistics that I did. The death cross occurred on this one right in this area on the SPY. So this is the last death cross we've had. And you can see what an awful short that would be. That's the exact moment that you should not be getting out of the market if you look at what happened immediately after, right? Just a massive move after this death cross, right? And I just want to show how easy I'm going to show you a bunch of cool stats that I did, but you don't even really need that, right? You just need to go and be skeptical of everything that you see. So this one, you actually would have gotten a little bit of a down move off of, but fast forward a couple days or a couple weeks, and you're back up at highs. So shorting it here this time, you would have gotten probably the move from here to here. So that's a little bit interesting. Now let's continue to go back, and let's see, we had two of them here. One would have happened right here, nearly at the low of this move. The other thing to keep in mind when you're looking at moving averages is they don't officially cross until later, until the end of the candle to the next one. So you can't just draw it when you see it. And I think that's the reason that people get super confused with moving averages, is if you look back, it looks like these crosses are significant. But if you actually say, okay, it wouldn't be here that it would have crossed, it would have been the next candle over because of how lagging they are. So that was a bad one. So this one was nearly the low of the move. That one was nearly the low of the move. So now we're back in 2015. So we're getting to the point where we may have done nearly 10 years worth of data already. So I think you guys have already kind of figured out my conclusion here. So now this one happened in 2011. So now we're over 10 years worth of data on this death cross. And this one would have happened right here, which was near the low of this move as well. So now let's go. So here are the statistics that I did. I'm going to do a blog post on statsedgetrading.com later today, or probably tomorrow actually. So please come check that out. I'll send out an email to my email list, which you can sign up for at the site as well. Let's just make that big. Since 2010, there were 6 instances of the evil death cross. So I basically took what was the price on the candle close that the death cross occurred, and then what happened 1 month later or 6 months later. So 1 month later, 2/3 of the time, you got a 3% gain. 1 year later, 100% of the time, you got a gain of an average of 24%. So in 0 instances was the death cross the signal to short for over a year. And that's kind of the point that I want to go through, is every time you see someone say, this is a bad thing, or this is a seasonal indicator, or this is a death cross, and this is a golden cross, and these are things you should focus on, what actually occurs in that, right? So follow the data, not the hype. I'm not saying you buy because of the death cross or anything like that. I'm saying this is something that should be ignored along with, fundamental data, along with a lot of other things in the market that you should completely and utterly just knock out of your brain and spend the time following your plan. If you're going to be interested in this blog post that I'm going to write up, which is just a lot of what I talked about right now, it will be up over the next few days. Link in the description below, and that will get you there. All right, guys, so that was my thoughts on the death cross. Now, with the ability of hindsight, we now know that at least the last few days after I made it, we have had this pretty substantial rally. So again, let me know in the comments below, do you think this will continue? Do you think we're going to line up with that about 66% win rate when it comes to buying this death cross as opposed to shorting it as the financial media would like you to think? So far, so good, but only time will tell. So again, thank you everyone for stopping by, and trade safe out there.